It wasn't about handing money over to Wall Street and hoping. It was about having control, having liquidity, using your money in two places at once. And when, not if, you die, that death benefit will go to your spouse and kids completely tax-free. With this, you can live fully and give fully. You can spend generously on the people you love now while having the peace of mind that you'll still leave them financially secure when you're gone. That day, after talking to Brent, I knew I needed to dive deeper. I wanted to own my own banking system so I could decide when, where, and how my money worked for me and my family.
This is my time. I'm on the rise.
Hi, I'm Kyle Stevenson, and you're listening to the Assets and Orthopedics podcast. This show is for high-income professionals who want to think like the wealthy. We focus on elevating mindsets, building empires, and creating a lasting legacy. Our goal is to empower you with financial intelligence, long-term strategies, and the mindset shifts necessary to achieve true financial freedom. We dive into real estate investing, entrepreneurship, and wealth-building systems that help you break free from the grind and live with purpose. At LegacyRx, we live by a simple creed. Be bold, embrace the hunt, unleash the beast. It's time to take action, design a life of purpose, and fearlessly pursue the freedom you deserve. Enjoy the podcast. Hello and welcome to the Assets and Orthopedics podcast. Today is going to be a high-level overview to become your own family bank. So my pops passed away in December 2024. In my dad's final months of life, we had some of the most meaningful conversations I've ever had in my life. We talked about family, we talked about purpose, and yes, we talked about money. I wanted to pick his brain. He was a very intelligent businessman. I wanted to learn what he'd do the same in his life. What would he do differently? If he was, when he was my age, would he continue to invest the way he invested at that time? I wanted to learn from him as a guy that I've always looked up to, and he's wise in his later years for sure. At the time, I'd heard bits and pieces about cash value whole life insurance, but nothing in detail. So I asked my dad, do you have any life insurance? My mom and my dad were nervous, and they had some medical bills and this, that, and the other. And so they were nervous about the money. And I said, Dad, do you have life insurance? He said, no, I had term life, but that expired years ago. So I asked about whole life. And he said he'd always heard to stay away from it, but knew nothing more. So the biggest thing in the conversation with him and my mom was that they were both a little nervous and anxious. Do they have enough money? Do they have enough money to cover medical expenses? He's in a subacute rehab facility. Do they have enough money to cover that? Are they going to get surprise bills? They were nervous. They were on edge. Do they have enough money for my mom to live the rest of her life if my dad passes? And those are things that were weighing on them. So this surprised me. Here was a man who invested well over the years in stocks, bonds, some real estate. He even sold his business for tens of millions of dollars. And yet, at 72 years old, I found myself wondering, could my mom and my dad really live on what they had saved for the rest of their lives? Say he does live another 20 years. Could they live on that money for the rest of their lives? So that's the accumulation model of investing. Save, 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 and then slowly draw it down, hoping it lasts the rest of your life. So those conversations were very positive, and they also reminded me of one of my favorite books, Die with Zero by Bill Perkins. The message is simple but profound. Spend the money you make on the people you love while you're alive. Create experiences, make memories. Don't just save it all for some grand inheritance you'll never see your family enjoy. So I'd say that's exactly what my dad did. He lived well. He gave generously, one of the most generous people in the world. He spent it on his wife and kids and grandkids. He didn't hoard his wealth just to pass it along someday. But here's what I later realized, especially during those conversations, that with the right strategy, you can actually do both. So a few weeks later, I had my aha moment. I had Brent Kesler from the Money Multiplier on my podcast, and my eyes were opened. Brent explained the infinite banking concept in a way that I'd never heard before. It wasn't about handing money over to Wall Street and hoping. It was about having control, having liquidity, using your money in two places at once. And when, not if, you die, that death benefit will go to your spouse and kids completely tax-free. No probate to deal with, no lawyers to deal with, no banks getting in the way. With this, you can live fully and give fully. You can spend generously on the people you love now while having the peace of mind that you'll still leave them financially secure when you're gone. That day, after talking to Brent, I knew I needed to dive deeper. I wanted to own my own banking system so I could decide when, where, and how my money worked for me and my family. Let's talk about what physicians deal with now. If you're a high-earning professional, especially a physician, you've been told to work for 30 years, max out your 401k, invest in index funds, and let the market do the work. Save for retirement. Hope you have enough at 65. Buy term insurance and invest the rest. But here's the truth. The wealthy don't invest like that. They don't live their lives like that. They don't lock up their money in retirement accounts, and they certainly don't give up control to Wall Street. Instead, they focus on liquidity, control, and tax efficiency. And one of the best ways to achieve that is through infinite banking. So let's compare two physicians, both earning the average, which is $363,000 per year, both saving 20% of their income, but they follow very different strategies. Physician number one uses the traditional route. This physician follows what's taught in medical school and by financial advisors. They max out their 401k with $23,000 per year. They put another $6,000 in an IRA. They invest the rest into a taxable brokerage account. The problem with this, their money is locked away for the most part until 59 and a half. Their investments are fully exposed to the stock market risk. They pay taxes on withdrawals, which could be much higher in the future. All right, so physician number two uses the infinite banking concept and real estate investing. So instead of locking their money away, this physician puts their savings into a high cash value whole life insurance policy, infinite banking policy, uses the policy to borrow against their cash value to invest in real estate. They pay off debt strategically while letting their money continue to compound. The result, their policy's cash value grows tax-free. They build passive income from real estate. They eliminate bad debt sooner without losing investment capital. They have full access to their money at any time with no penalties. Death benefit will pass down to their heirs tax-free. That's important. So the biggest advantage of this is instead of just hoping the stock market performs well, this strategy builds wealth while maintaining liquidity, control, and tax efficiency. Now, things I should point out about the infinite banking policy is that policies do require consistent premium payments to perform. And the easiest way I tell people to think about this is instead of thinking about it as paying a premium, it's putting a deposit into your banking, into your own family bank. If you put a deposit, you can actually borrow that money. So don't think of it as a premium, think of it as a deposit. And then the other thing is poorly designed whole life policies, similar to what big box insurance companies often sell, will not produce these results. And that's the traditional life insurance policy or traditional whole life insurance policy that I think Jim Dolly talks about, that's sold by, your brother-in-law or one of those, big company salesmen. This is very different. And then the last thing is with infinite banking, assume long-term discipline. This is not a quick flip. This is not something, get rich overnight. This is becoming your own bank. You are going to borrow from yourself. This grows over time. This is a lifestyle change. All right. So what is infinite banking? At its core, it's about using a specially designed high cash value whole life insurance policy from a mutual company, structured in a way that prioritizes cash growth over just a big death benefit. Here's what makes it different from the whole life policy your neighbor has. It's built with paid up additions to turbocharge early cash value. You can access that cash in 30 days or less. Your money inside the policy keeps compounding even when you borrow against it. It's what we call the and asset. Your money grows in the policy and in whatever investment you put it into. You should read the book called The And Asset by Caleb Guilliams, Guilliams. Brilliant book. All right, so Why do the wealthy use it? The wealthy understand the value of control and liquidity. They don't want their money locked up in accounts they can't touch until they're 59 and a half. So with infinite banking, you get guaranteed growth plus dividends, liquidity in 30 days or less, a built-in estate plan that bypasses probate and goes to your heirs tax-free, the ability to make your dollar work in two places at once. That's called the velocity of wealth. Now, I want to address the elephant in the room for physicians. Jim Daly, as we all know, he's the founder of White Coat Investor. Great guy, great blogs. They do a fantastic job educating physicians, but he is a huge advocate of buy term and invest the difference. It's a very similar mindset to Dave Ramsey, but he believes that whole life insurance is too expensive. It offers low returns and mostly benefits the agent selling it. But here's the thing. He's actually right. He's right about traditional whole life policies designed for maximum death benefit and minimal early cash value. But that's not what we're talking about here. We're actually talking about the opposite of that. So the policies that we are talking about are engineered for maximum early cash value. We're not trying to replace your market portfolio. We're giving you a place to store your cash that grows predictably, can be borrowed against without interrupting compound interest, and comes with a guaranteed death benefit. If I buy term and invest the difference, I'm hoping the market performs over decades. With infinite banking, I can earn 3 to 4% plus the dividends, which makes it 5 to 6% inside the policy, while also using that same dollar in a real estate deal that earns me 12 to 20 plus percent. And that's why it's called the and asset. That's called velocity of money. You can't get that in buy term and invest the difference model. Plus, term life eventually expires, just like it did for my dad. Plus, term life eventually expires, just like it did for my dad. Do you know what percentage of term life insurance gets paid out every year? Take a guess in your head. The answer, 1.1%. That is extremely low. And that shows you how beneficial it is for these insurance companies. They make a ton of money off term life insurance. So this cash value whole life policy lasts longer than you do, and your family receives a tax-free payout with no lawyers, no probate, and no delays. All right, so how it works. Here's a step-by-step process. You fund your policy, which includes a paid-up additions rider to maximize the cash value. Again, think of it as a deposit into your bank. In the first month, you can borrow 80 to 90% of your premium. It's available to borrow. You borrow against it, not from it. You take out a loan, not a withdrawal, so it's not taxed. And so your money actually never leaves the policy. It continues to compound uninterrupted. You can use that borrowed money for a down payment on a short-term rental, an investment in a syndication as a limited partner. You could do private lending, and I would encourage you to be in the first position as a private lender. Or you could pay cash for a major expense, such as a car, a house renovation, your mortgage, if you have enough in your policy. And then you pay yourself back with interest. And then you repay the loan on your schedule. You set the terms. That's the beauty of it. So my personal examples. So I have policy for me, policy for my wife, policy for our kids. And so for my wife's, she is buying a new car. We have 3 kids. We've had the same car since before kids. So we're buying her car with her policy. So she'll use the policy to pay for the car in cash. And then we will make those 5-year, 60-month payments back into her policy with interest. And that pushes that policy to grow faster. So we can recapture all that money. And then my policy, I'm using it for investments. I'm using it for real estate. So I am, part of half of my policy, I put into an equity deal. So limited partner on a multifamily investment that is giving us 23% returns. And then we'll put, then we continue to let that work for us. We pay off the interest at the end of each year using my LLC. So there's a tax benefit. And then the other part of the policy is we're going to be, we private lend, or we are real estate lenders to a guy that does a ton of fix and flips, and he'll pay 12 to 13% interest per month. And that will pay back into my policy as the policy continues to grow at 5 to 6%. So it's genius to use these policies as our bank. So why is it perfect for physicians? Physicians face a unique set of challenges. We have high income, which equals high taxes. We have limited time to manage active investments. We have a desire for security and predictability. Infinite banking provides tax-efficient growth, liquidity for opportunities or emergencies, guaranteed death benefit for family protection, a foundation that can be combined with short-term rental, real estate professional status, and limited partner strategies for maximum velocity. This is not about replacing your other investments. It's about creating a safe, liquid, and guaranteed foundation so you can take advantage of opportunities without putting your future at risk. All right, one of the most overlooked benefits of infinite banking is what it does for your legacy. Most physicians I talk to, even medical students and residents, they say their number one financial goal is to leave a lasting legacy for their family. But when I ask how they plan to do that, most really aren't sure. The truth is, most families pass down a lump sum in hopes that the next generation will manage it well. Too often, that wealth is gone within a few years. That's the shirt sleeves to shirt sleeves in 3 generations problem. Look that up. It shows that most wealth does not go past the 3rd generation. The Rockefellers, on the other hand, solved this by creating what's essentially called a family bank. Every generation owns high cash value life insurance policies. When someone passes, the death benefit flows tax-free into a family trust. That trust then lends money to family members for productive uses, like education, starting a business, or buying real estate. And those loans get paid back to the family bank, so the money is never depleted. In fact, it continues to grow. They also have a family constitution. It's a simple document that lays out the family's vision, values, and rules for how the money is used. And they meet annually at family retreats to review, teach, and make decisions together. I first learned this concept in depth from a former guest on this podcast, Garrett Gunderson. Look him up if you haven't. If you haven't listened to our podcast, please go back and listen to it. Read his books. He's fantastic. I think he's a great philosopher. But he's the author of What Would the Rockefellers Do? If you want to go deeper into these details, listen to that podcast episode with him, and we unpack it at length. It's fantastic. But this is how the Rockefellers have preserved wealth for over 150 years. Here's the best part. With infinite banking, you can take these same principles and apply them to your own family, no matter your starting point. You can live generously now, enjoy the fruits of your labor, and still leave behind a system that keeps your money and your values working for generations. All right, so we're finishing up here, but if this episode resonated with you, don't just let it be another interesting concept you heard about. Start taking small, intentional steps to educate yourself and your family. Here are some steps you can take. Number 1, read Becoming Your Own Banker by R. Nelson Nash. I've read this book a handful of times now, and I love it, and I learn something new every single time. This is a foundational book for understanding the infinite banking concept from the man who pioneered it. He didn't create it, he pioneered it. Number 2, play The Cash Flow Game by Robert Kiyosaki, or Cash Flow for Kids. So that's another way to do it. I have not bought the game yet, but I have that on my list for Christmas this year. My son will be 5, and I think he will pick it up pretty well. But it teaches your kids about assets, liabilities, and the importance of cash flow in a way that's interactive and fun. Number 3, read What Would the Rockefellers Do by Garrett Gunderson. Learn how one of America's wealthiest families has kept their fortune for over 6 or 7 generations, and how you can apply those same principles. Number 4, create a family constitution. Outline your family's shared values, principles, and long-term vision for wealth and impact. and make it a living document. Put it in your trust. Number 5, host annual family retreats. Spend dedicated time talking about family goals, reviewing your investments, and teaching financial principles to your children. Number 6, find a mentor or coach in infinite banking. Work with someone experienced who can help you structure your policy for maximum efficiency and integration with your overall financial plan. And lastly, talk about money openly. Whether you're with your spouse, your kids, or extended family, normalize conversations around money, investing, and legacy. Infinite banking is about control, liquidity, and legacy. It lets your money do 2 jobs at once, providing peace of mind for your family and removing the middlemen who profit from your deposits, i.e. the bank. I've always heard the quote by Robert Kiyosaki. It's not about how much money you make, it's about how much money you keep. But it doesn't stop there. The full quote is actually, it's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. That's the important part. That's really legacy. That's the Rockefeller method. That is what infinite banking does. I wish my pops knew about this infinite banking concept. I believe it would have given him more control, more peace of mind, and even more ability to bless others while he was here, all while guaranteeing something for the next generation. And that's why I'm passionate about teaching it to physicians, families, and anyone serious about building lasting wealth. If you want to see how this could work for you, DM me on Instagram, the word banking, and I'll connect you with the Money Multiplier team that I use for my own policies. Or you can visit joinlegacyrx.com and click on the BYOB tab for more information. BYOB stands for Becoming Your Own Bank. All right. I hope you get a lot out of this episode. We'll talk soon. Thank you for listening.
This is my time. I'm on the rise. Can't hold me down.
Thank you for tuning in to the Assets and Orthopedics podcast. If you're ready to elevate your mindset, build your empire, and create a lasting legacy, don't miss the inaugural LegacyRx Conference on October 24th and 25th in Indianapolis, Indiana. It will be a transformative weekend designed to help you unlock your potential, take bold action, and redefine your future. Visit LegacyRxConference.com to grab your ticket and join the movement. Until next time, be bold, embrace the hunt, unleash the beast.